Gold ETFs see $2.4 billion in outflows while Bitcoin ETFs thrive. Ruholamin Haqshanas last updated February 15, 2024 at 8:50 GMT plus 22 min read. Source: AdobeStock / Emil. Gold exchange traded funds ETFs have faced significant outflows this year, while ETFs tracking the spot price of Bitcoin BTC have seen strong inflows. According to Bloomberg intelligence analyst Eric Balchunas, the leading 14 gold ETFs have experienced outflows of $2.4 billion in 2024 as of February 14. Among the gold ETFs, only 3 have seen minor inflows this year: VanEck Merk Gold Shares, FT Gold Strategy Target Income ETF, and Proshares UltraShort Gold. The largest outflows came from BlackRock's iShares Gold Trust Micro and iShares Gold Trust, with losses of $230.4 million and $423.6 million, respectively. Bitcoin ETFs attract around $4 billion in inflows. In contrast, preliminary data from Farside indicates that the 10 approved spot Bitcoin ETFs have attracted aggregate inflows of $3.89 billion this year, reaching record volumes. This divergence in investor sentiment highlights the growing preference for Bitcoin over gold as an investment vehicle. Some speculate that the outflows from gold ETFs are not necessarily flowing directly into Bitcoin ETFs, but rather into U.S. equities driven by the fear of missing out FOMO. The decline in gold prices in 2024 has further exacerbated the divergence. The commodity has experienced a 3.4% loss since the beginning of the year, reaching a 2-month low of $1,993 per ounce on February 14. Conversely, Bitcoin prices have surged by 23.5% during the same period, hitting a 2-year high of $52,483 on the same day. In a recent report, the World Gold Council also highlighted global gold ETF outflows and a reduction in speculative positioning as contributing factors to gold's lackluster performance. Additionally, long-term treasuries and the strength of the U.S. dollar have acted as headwinds, driven by positive U.S. economic surprises. Gold and Bitcoin have often been compared as safe haven assets during times of economic and geopolitical uncertainty. While Bloomberg senior commodity strategist Mike McGlone initially predicted gold would outperform Bitcoin in 2024, the current trend suggests a different outcome. The preference for Bitcoin, with its potential for higher returns, signals a shift in investor sentiment towards digital assets. Spot ETFs attract tanks more BTC than miners' production. As reported, spot Bitcoin ETFs have managed to accumulate 10 times more BTC than what miners were able to produce on Monday. On February 12, approximately $493.4 million, equivalent to around 10,280 BTC, flowed into spot Bitcoin. Among these funds, BlackRock's iBit emerged as the clear leader, attracting a massive $374.7 million. Fidelity's FBTC fund followed closely behind with a substantial inflow of $151.9 million, while ARK21 Shares ARP fund secured $40 million. Despite these significant inflows, there were minor outflows of $95 million from Grayscale and $20.8 million from Invesco's BTCO, resulting in a net inflow of nearly $500 million. In contrast, Bitcoin miners produced approximately 1,059 BTC, equivalent to roughly $51 million on the same day, representing only 10% of the amount of BTC accumulated by spot ETFs. A similar trend was observed on February 9, with spot ETFs capturing approximately 12,700 BTC, worth a staggering $541.5 million, while mining contributed a mere 980 BTC, valued at around $45 million. Follow us on Google News.